Hi, everyone. If you will give it a couple of minutes, I think, just for people to join, and then we'll start. So give us a minute, and then we'll get going. Thanks. Okay, I'm far too impatient, and we have plenty of people here already. So I think let's get going. Welcome everyone to FNA's first CBDC broadcast of the year. Overall, our 13th one. We've had over 2,000 people join FNA for these online events. So to everyone that's here, maybe this is your first, maybe you've joined other sessions. Thank you for being part of it. Thank you for supporting us, and of course our guests as well along the way. I'm Anthony Harrison. I look after marketing here at FNA. We have two fantastic guests for you today. I'm just going to cover some very quick housekeeping, and then I'll hand you over to them to begin the discussion. So in terms of housekeeping, this CBDC broadcast follows a 60-minute format in which our guests will provide insight into the latest developments, innovations, influence in the sector and the topic. If you'd like to ask a question, as many attendees do, please don't use the chat button, the chat option at the bottom of the screen, as it makes it a lot harder to track. Sometimes questions get lost. So please do use the Q&A widget. Ask your questions through the Q&A widget. There's a little button at the bottom of your screen, and then our guests will aim to answer as many of them as we can during the Q&A session at the end. So for those, next slide, please. Sorry. So for those of you who perhaps aren't as familiar with FNA, maybe it's your first session, I'll just explain very quickly what we do. FNA is an advanced analytics and simulation technology company. So we work across 4 core sectors, namely commercial banks, central banks, FMIs, and national security. The software that we provide is solution-based per sector. So where a central bank might use our tech for understanding the impact of launching CBDC, a commercial bank will use the same underlying tech to optimize their liquidity in real time, as an example. Next slide, please. So this slide digs a little further into our CBDC solution, which is of course relevant to this particular session. The background to this, of course, is that you have over 90 central banks who are looking to introduce a digital currency in the near future. There are, however, a lot of questions related to CBDCs that remain unanswered, and the impact of CBDCs, let's face it, are still relatively unknown. So questions like, what impact will the introduction of CBDCs have on the financial and economic system? Could card companies suffer a decline in their transaction revenues as a result? Could financial inclusion increase by providing unbanked people access to CBDCs, and many more. So built in partnership with G&D, a partner of ours, our CBDC simulator delivers a flexible agent-based model of any payment ecosystem. This then enables regulators and financial system participants to rapidly test, model and simulate the economic and financial stability implications of introducing and then running a CBDC. So in short, it's essential, we believe, to understand the impact of a CBDC before and then after it's rolled out. So on to our discussion swiftly. I'm going to hand you over to Dr. Carlos Leon, who works here at FNA as Director of FMI and Digital Currency Solutions. For those of you who have joined our previous sessions, you'll certainly recognize him. Very, very regularly a moderator for these sessions. Thank you, Carlos. Carlos will then introduce our speakers. We'll get the discussion kicked off, and then of course we'll come to that Q&A at the end. So Carlos, thank you, and over to you.
Thank you, Anthony. Good morning or good evening, good afternoon, depending on which part of the globe you are. As Anthony mentioned, I'm going to start with presenting our speakers for today. We have first Catherine Gu, which is head of CBDC and protocol at Visa. And we have also Carmell Cadet, founder and CEO at MTech. Both of you, thank you very much for joining us. This will be a very, very, very pleasant, interesting, and enlightening conversation. Anything you want to tell us about yourselves before we start?
Hello, I can kick off first if you want. All right, well, thank you first very much for FNA for hosting me, and Happy New Year to everyone on the call as well. So I'm Catherine Gu, I'm the head of CBDC and protocols at Visa. So we're very excited in the space in general, just trying to follow, what is the future of money, the digital money movement itself, and be a network of networks. We're trying to figure out how we can harness our capabilities and extending our existing networks to help to support the growth of the future innovations and so on. So I'm very excited for this conversation because I'm sure there's a lot to talk about. So yeah.
Thank you, Catherine. Carmelle.
Hello, everyone, and a Happy New Year again. It's a pleasure to be here to kick off the year talking about something that I'm particularly passionate about. My career at IBM and leading a team to think about what central banking infrastructure could look like in the future is very exciting. And the conversation today when it comes to the future of CBDC, it's a very hot topic, adoption and designs and protocols, and whether blockchain or not. I don't know if that's still a debate or not, but I look forward to it. Thank you for having me.
Thank you, Carmelle. Thank you, Catherine. So let's start our topic. So let me introduce the topic a little bit. The name of the game today is Digital Currencies, Coexistence or Competition. So that's what we are going to be working around. And just as a summary of the topic, in last year, we looked at various design features, proofs of concepts, interoperability of CBDCs. This year, we would like to take a step further into the real-world application of retail CBDCs. That's our topic today, and what it would entail to the payment ecosystem. So we all know digital money is not a new thing. It's been around for decades in the form, especially of reserves at central bank and commercial bank money. So to talk about digital money or digital currency is not a new thing. But we know that today we have additional forms of digital money, which is it comes in the form of retail CBDCs, but we also have what we can call challenger forms of money, perhaps in the form of stablecoins as the main example. With these new entrants to the money ecosystem, there are many questions, but we want to circle around one main question. The question that I'm going to give you during the broadcast. How will the different forms of money interact? Are they going to work as substitutes or complements? Is it going to be a competition or a coexistence? So today, as Anthony already introduced us, the idea today is to have you, Catherine from Visa, and Carmelle from MTech to discuss this subject. So once again, welcome and thank you for joining us. So let's start with the first question, and you already told us a little bit about what you do at Visa and MTech respectively, but can you tell us a little bit more about exactly what you do at Visa and MTech related to digital currencies ecosystem? Let's start with Catherine again.
Sounds good. So we have this team called the Visa Crypto Team, and we track very closely around innovation and research, specifically pertaining to, the development in crypto ecosystem in general, and definitely when it comes to protocols such as blockchains. And then we look at, what's being done with these kind of new novel technologies. And closest to our heart is definitely something to do with the payments ecosystem and the future of money. So, we've been closely following the development of stablecoins since early 2010s and so on. And now, of course, we have this growth of CBDCs. And, my team has been very engaging with all the central banks across the world, trying to have this active, ongoing dialogue, because it's very important, from the private sector perspective, to deeply understand why are central banks motivated for, developing a CBDC, because I'm sure a lot of the people on the audience knows that there's different variations of what a CBDC could look like, whether that's a wholesale CBDC, a retail CBDC, a combination of both. And we have seen incredible idiosyncrasies across different regions, whether we're talking about a developing country looking for a retail CBDC versus a more developed country, perhaps for a wholesale CBDC. So from a payment service provider's perspective, and again, emphasizing on the network of networks, our role is to really enable the money movement to be seamless and really focus on, the end user experience, trying to make sure that, it's trusted, it's secure, and it's seamless, right? Ultimately, you want to have that experience that you don't even need to realize what's changing on the back end, but your experience could be good or could be enhanced because whatever, the system has been doing. So this is what we are spending our every day to have the conversation with central banks, definitely with all our 15,000 financial institutions across the world, really trying to understand what they're seeing at the moment. And of course, having the same conversation on the merchant side and trying to figure out, if this is the future with digital currencies, what is it that from a merchant perspective, could potentially be the use cases as well. So.
Thank you, Catherine. Very interesting. Carmelle.
Yes, and so MTech took a different approach when it comes to CBDC specifically. We look at the central bank as a customer segment, and the early 2020s, especially after COVID, we drafted a paper that really introduced the concept around CBDC as a digital cash infrastructure. And what that meant is a few principal choices, if you will. Using blockchain and distributed ledger technology is something that we think is really revolutionary, but also very relevant when it comes to the pain points in financial markets. The ability to settle, the ability to have more visibility and speed and access. I like to think about the decentralization of access when it comes to money. But also when we looked at the overall ecosystem, we saw the rise of Bitcoin, really understood the value of cryptocurrencies, but also understanding the risks that not every token can replace a sovereign currency. In some markets, that's more difficult of an argument to make if the currency is more volatile than Bitcoin, for example. But you kind of get a sense of the risk aspect to it is very different. The risk profile is different. Then we saw the rise of stablecoins trying to address the volatility problem. But that required a bit more centralization. The trust and the pegging required kind of fewer players being able to issue tokens and to maintain that peg. You can do it algorithmically, if you will, but the integration of third-party services is something that was absolutely required. But then, the question really came in, can we actually scale stable coins like sovereign currencies can? And, some factors that led us to understand the value of central bank money is really the fact that the central banks play a key role in the overall financial market. So the opportunity that MTech saw is, can we actually tap into the efficiencies, the benefits of modern technology if we were to bring that at the central banking layer, but really understanding the role of a central bank as an infrastructure provider, not particularly a service provider. And then you really look to the Visas of the world and the ecosystem players to say, what if you had a better infrastructure, right? For money to really move around, for you to get more visibility, for you to have regulatory frameworks and risk mitigation frameworks that really allow cross-border payments to be what they can be, lowering the cost of payments. So the really simple decision was to say, focusing on modernizing central banking infrastructure. And on one side, we look at the regulatory aspect of it, because come to find out, when we talked about CBDC, regulation comes right after when it comes to adoption and implementation. So we saw that as an opportunity to say, if we can help central banking modernize, then the Visas of the world and the ecosystem can really have a modern infrastructure to provide merchant services and better consumer services around that. So we're on the infrastructure end, And we built an API-led model. We leverage a distributed ledger technology that allowed us to make the case around trust. We made a bet on public ledger. We selected Hedera. That's one of those unique principal choices that we did as well. That really drives the concept around how can central bank be more modern and be Web3 ready and look at smart contracts and really having a modern stack.
That's great. Normally, I will highlight some of the things that you said if I find that there's some use of connecting the dots of what you have said. And there's something that I would like to connect from what you both said. From Catherine part, I like a lot the idea of the user will not notice anything of what's happening in the back. The use case should be clear, but the user shouldn't be aware of what type of money is he using. Is central bank issued is like the first layer, or is bank issued, or is stablecoin issued, or is e-money issued. The user at the end doesn't care a lot about that. It cares about that it works. And what Carmelle said has to do with that infrastructure that is changing in the back of everything. And it's about making the central bank, once again, the central banks are already an infrastructure for many things, but to have it as an infrastructure for digital currency is something rather new, at least for the retail part, because in the wholesale part, we know that they have done it a long time ago. So that's like the dots I would like to connect now. So let's go to the second question. So at first, a retail CBDC is a digital form of money issued by the central bank and available to everyone. And it sounds like a competition for payment system providers such as Visa. So every time at the beginning, when I was talking, I was thinking about what is Visa has to do with CBDC. At the beginning, I thought it was feels like competition. Can you tell us how Visa is looking at retail CBDC as part of Visa's business? Obviously,
Sure.
This is Catherine's.
I guess so. Definitely. I mean, we from our perspective, we're trying to support all kinds of money movement. And let's set aside just the whole evolution around digital currency for now. In today's world, we already have many different forms of money, right? And on different payment rails and so on. So our role is first, we need to figure out what are these different types of money, whether they're commercial money, whether they're central bank money or something else, and what kind of existing payment rails there are, because there are many of them. And so the challenge has always been around accessibility and interoperability. And so our strategy is not to pick winner or loser, but our strategy is really trying to make the money to move wherever that rail might be and connecting between different rails. And that's tapping back to this very essence of our strategy. It's always been the network of networks. So as we're looking at the future of money that is happening today, certainly from a technology perspective, we need to understand how these new technologies can be compatible with our existing infrastructure. That's for sure. If it doesn't, then that presents a problem, I think, for all of the existing ecosystem players as the intermediaries. So what we do emphasize to central banks is first, no matter what the technology choice you choose, of course, that's down to the central bank as they're looking at CBDC, you need to think about that backward compatibility component, which is very crucial. It's crucial for us, is crucial for our banking partners as we're thinking about how we may support CBDC as a retail version. For example, if a central bank wanting to push it out, how do we actually make that CBDC spendable, right? Like a user don't want to just pick something like a completely new form factor and trying to use it when, on the other hand, the e-commerce or the merchant can't accept it. This is where you get a very low adoption rate if you don't consider all of that things. So I wouldn't say it's about threat or anything. It's more about trying to figure out exactly what is the underlying technology behind that retail CBDC, making sure absolutely that this is backward compatible with the existing payment system. And what we're trying to really push out is therefore on that technology front, how we can demonstrate that can be done, i.e. how can we demonstrate, say, a CBDC potentially using some blockchain technology built on a different, let's call it a Web3 infrastructure. So then how is that Web3 infrastructure going to then connect back into something like a Visa network, and how we can still leverage something like a Visa card, right? A debit card model in which it's so easy to use. You can carry that card as a US citizen or whoever, you can go to Tokyo tomorrow. Doesn't matter. You don't need to think about those FX and all of your bank accounts and stuff. You just need to carry that card. You know, if it's a part of the merchant, they'll recognize that card and they'll accept the money. All the backend complexity will be handled. So you want to achieve the same result with CBDC. Again, from both the user and the merchant side, you don't need to worry about the form factor of the money or the technology being used. That should be handled on the back end. And so just as a concrete example, and I think that was shared in the chat, what we pushed out as sort of a concept, right, is around this notion of a CBDC payments module. It emphasizes on this notion of accessibility, especially, you know, targeted towards central banks who are looking at a retail use case. That level of accessibility for the end users to be able to spend the CBDC from day one using existing infrastructure is going to be crucial. And we can support that and add value actually into the central bank's development in terms of how you can actually do it with players like us to be part of that design.
That's very interesting. I would summarize everything on, because I think that the concept that most of us had about Visa being like in competition to CBDC or finding like a threat, as you mentioned, it's plainly wrong. I would say that Visa is trying to be like,
we're the payment enabler. We're trying to facilitate the payment. So we are not competing with the money itself. We're just trying to figure out how to support those money. So that's that. Yeah, exactly.
You're money agnostic. I mean, it doesn't matter which kind of money we're talking about or which kind of payment instrument we're talking about. Visa wants to serve with the payment rails. That's the thing. And that's very interesting because at the beginning, as I mentioned, normally you would say Visa against CBDC, but it's CBDC on top of or using Visa rails, or I mean CBDCs or stablecoins or whatever. That's the thing.
That's what we're trying to figure out. And as long as those money is, you know, compliant, we of course respect all the compliance and KYC and regulations. But the key is coming to that use need, right? The end user case is like, we need to make sure that payments experience is smooth. And that's the most important thing for us.
Great. Carmelle, let's go back to you. For the first time, central banks are facing the challenge of putting a new payment instrument to consumers and merchants. I mean, in the modern time, let's call it like this. And we have read news about weak retail CBDC adoption in Nigeria, Bahamas, and the pilots of China. From MTech's viewpoint, what are the keys to the success of these retail CBDCs? Are there already like some do's and don'ts when designing and rolling out retail CBDCs?
Yeah, I mean, I think for those who don't know, I'll share that I was part of the early stage of the Bahamas CBDC implementation. The context of that particular market is very important to understand, and also each driver for a central bank might be different. So it might say financial inclusion at a high level, but then how do you really solve the financial inclusion in Bahamas is very different compared to how you solve financial inclusion in Nigeria. And the idea of having kind of a landscape and a different stage of development in those markets is also another factor. But, you know, when thinking about do's and don'ts, I think it's important to understand that those are early adopters, right? Those are early adopters. So at the time of Central Bank of Bahamas, you know, Ethereum was just getting started as a protocol, just so everyone kind of have a context, right? It was very early days. All we had really were papers and early POCs by G7 central banks, if you will, that don't have the same pain points as a country like Bahamas. So then you have a country who really took a leap of faith to step in to say, look, we understand enough about this new technology. And I remember the RFP very specifically calling for a blockchain technology, that was the exciting part for us. But the idea was to make a choice in selecting a blockchain approach to solving financial inclusion. And then, of course, going into the market, understanding how to break through some roadblocks, whether, the banks not wanting to participate, the financial literacy, the confusion between blockchain and cryptocurrency, and the fear that comes with one versus the other, or the curiosity or the desire to, take more risky bets and do other schemes with cryptocurrency, that feeds into it. But I think what you're saying in Bahamas, Nigeria, and China are different pain points. So this is just my view. I haven't talked to the central banks to really validate this, but this is just my view. And MTech is not the technology provider directly for either of the central banks. But in Bahamas, this was a time that I was still at IBM, really trying to understand how to implement a CBDC for financial inclusion that is a new protocol, and also needing financial literacy and plugging in all the ecosystem. The economics of the ecosystem players is something that it's very hard for the central bank to be, kind of figuring that out. It does require everyone else to want to come in and talk about, how are they going to make money, just to be blunt, right? That's what everyone wants to figure out. How is this different compared to what I'm doing today? Is this cannibalizing my current payment service compared to me becoming and adopting CBDC? Do we compete with CBDC? How do we make money with CBDC? So that wasn't always clear at the beginning. The central bank was really trying to solve a problem. But you kind of now see the $10 being integrated through different fintechs, right? So you have a journey, at least from the outside now. I can see different players kind of plugging in, and that's what it should be, right? You should have the fintech and the ecosystem thinking about how to tap into the currency itself, and then providing services around that. And then you kind of have an extension of their services by plugging in and providing Visa card, like Catherine was saying, being able to provide a trusted rail that already have the merchants onboarded, making it a bit seamless to make its way down. So I think you're seeing more and more of that now in Bahamas. In Nigeria, I think you're seeing a different element that in my opinion, I think the matching of the technology stack is a gap compared to what the market particularly needed. But I think you're seeing the central bank really having an effort and kind of strategizing on how to bring CBDC in different use cases. I don't think anyone is particularly kind of surprised at sometimes technology and innovation takes time, especially if it comes from a regulator. So that is a different, and China tried, right? China had major events to be able to push innovation and still struggle to go through that. If I look back now, I think where I sit today, kind of having those three examples, economics matter. Incentives matter as far as if the incentive is more now on the central bank side, being able to craft something and design something that makes it interesting for the other players to come in. I think that's a major roadblock that central banks need to figure out. And also the technical stack, right? Selection of a technical stack really matters. If it's a closed systems, that makes your economics conversation with the stakeholders even harder. Meaning the banks will say, why am I doing this if I'm going to provide CBDC and people are going to take deposits away from their account and putting it on a CBDC wallet, and then I'm supposed to provide and do the engineering work to enable CBDC wallet via my app. Why would I do that? It's a very good question. But I think expanding now into fintechs and allowing them to build new business models on top of CBDC, I think you're seeing Ghana talk about this. We were in Ghana in November, and the central bank talked about, and their paper even made that very clear, is that they want to be the infrastructure, the currency infrastructure provider, but building it in a way that makes it kind of bring your own app, I call it, bring your own app approach, where that can be connected and the ecosystem can be your distribution network and handle adoption much faster. Because there are benefits to the ecosystem. I mean, the fintech bank relationship is really getting a lot more confusing now. Some fintechs sometimes become bigger than their bank partners. It's kind of an awkward conversation. And you're kind of having certain dynamics that will force, especially stablecoin issuers that actually want access to central bank accounts now, right? You're seeing USDC and BlackRock, and the bank relationships are becoming, kind of an elephant in the room as far as what to do about that. So selecting a stack that makes it easy for third parties to connect, and then figuring out and understanding that the economics have to be there. Those are the two things I think is very important when it comes to driving adoption at this point.
And just to highlight very quickly the last part of what you mentioned, I also heard that from Nigeria FinTech Association, that they're willing to be on equal ground as commercial banks are. I mean, to have like the same, let's call it rights, or the same, level playing field to be able to distribute CBDCs as well. Because in some countries, fintechs are not only bigger, but better connected with the people.
Closer to the people,
closer. Yeah. They have solved the last mile problem better than a commercial bank could do in some countries.
Exactly right.
Thank you, Carmelle. So let's go to the next one. During 2022, we received many questions from the audience in the CBDC broadcast, focusing on the coexistence of new and challenger digital forms of money, from CBDCs to stablecoins and cryptos. What are your views on how new forms of money and challenger forms of money will reshape the payment ecosystems? It's going to be peaceful coexistence, or is it going to be something like aggressive competition? Catherine, let's go with you first.
It's a very interesting question, because this is still like shaping out, right? We don't have a clear winner or loser, but as said, from the Visa perspective, this is not the focus. We're trying to figure out what is the use cases. And I very much anticipate you're going to have very different type of clients and users consuming, whether it's a stable coin versus a CBDC. And also what we're seeing increasingly is banks playing a much proactive roles in this, in the sense that, we've seen a lot of pilots in which banks are trying to say, well, what about a tokenized bank deposits or bank accounts, right, directly on the blockchain? And that's gonna get very interesting. I think, again, just coming back to the world we know today, there are already a flavor of different type of money. Sometimes when I go to a small store on a high street, I might prefer to use my physical cash, but majority of the times, if I'm paying my rent, I don't want to use cash because no one is going to accept it. I'm going to use through that banking system to use the commercial bank paper. And, there could be other B2B use cases in which they're moving money in a different way. So I think that model is still going to continue, except it's just going to expand in the sense now you have digital versions of money beyond the e-money that we have already today on the existing Web2 rails. And so again, I think it comes down to what is the user preference. And any single user, depends on the need, whether it's for retail cross-border remittance or for me to pay large sums of money, your choice of that money might differ. So I do think that they're going to coexist. I don't know in terms of the volume size, which one is bigger or the others, but I think that coexistence is going to happen. But what is very much needed is the right regulatory framework, because one thing is about coexistence. The other thing is about interoperability, because, if we want to swap out a retail CBDC into a stable coin, whether that's a dollar denominator or something else, currently the framework isn't clear enough, and banks, we know, are not comfortable holding on to things that is related to crypto assets. So it has a barrier at this moment in time, and we would like to prefer to have that regulatory oversight to tell us, how would you classify them? And with that in mind, then I think the interoperability will become like an important one to kind of address, and also provide it as a service. So I think hopefully that addresses the question about the coexistence. And I just want to sort of highlight, also together with the creation of money, you have alternative payment rails, right? We have very good payment rails in many developed countries. That is the real-time payments. In the UK, it's faster payment. In the US, you're having the Fed launching their payment rails, and there's many other developing countries doing similar stuff, like the PIGS in Brazil and India have their own stuff. So the current payments ecosystem is pretty efficient. We're just trying to figure out, can we do better than that? Or are there some more interesting things that could come out of it? And I think with these new technology, therefore, you might have different flavors of money to cater for, say, whether that's like a programmable money that's used, say, as a government voucher to directly disperse, or it's just a general retail CBDC you can use like a cash for your like very low amount spending. So that's going to be very interesting just to see.
Would you say that we're heading to specialization of money based on use cases? Because as you mentioned, perhaps some people will love to have stablecoins because they want to send money abroad very easily. That's one use of a good use of stablecoins. But you can also use e-money from e-money issuers. Let's call it, I don't know, Wise, M-Pesa, because you need something very specific to send money locally. It's going to be like something like specialization of money.
It's very, and I like the way you're thinking about it. It could be. And again, we do have it today, right? If you think about on Amazon, I have my Amazon credit. That's a special money that is available in the Amazon ecosystem being used for money purpose. And I can do it similar on PayPal and Venmo. I have different type of money. And then you have cross-border remittances that might be another form. So I think that is going to continue to specialize. And also, I think with just the better technology, maybe you can be more purposeful designing that token of what it could be serving for. So I think it's still, like I said, the next few years is going to be super exciting that hopefully the technology can really show what's the real world applications. And we're excited just to see, the type of token that could emerge and also the type of payments experience, new payments experience that we don't have today, together with that programmable money might emerge, which is going to be quite cool just to follow. So yeah.
Thank you, Catherine. Carmelle.
So I want to start with something that Catherine said. A lot of markets right now might say it's working, right? It's not broken. So what are we fixing? And to use an analogy, I think it's very important to understand that if you are given the opportunity to go on vacation, yes, of course, you'll want to go on vacation, but then something happens inside when they tell you where you're going, if you're going to, in North Carolina versus if you're going to Hawaii. And you might like both, but those are two different experiences, right? And if you were given the choice to say, whichever one you want, no questions asked, this one you might need to prepare more, or you might need a hat versus North Carolina, you might need a coat. Those are the differences, but you understand that you're going to have a very different experience if you go to Hawaii. And if you're a beach person, it means something to you. So I say that to give you an analogy of the current system is working. However, what has been happening in the development of technology is that we have developed better ways to do what we do today. And there are a lot of pain points around the current infrastructure. So when you're seeing the rise of cryptocurrency and you're seeing the rise of stable coins, it's really also an example or a highlight of the pain points that we have in the current system. So it's not working. It's just that there are better ways and so much more efficiency that we can unlock out of the innovation that has been happening now. So when it comes to the coexistence, I agree with what Catherine said around people are going to have a choice the same way they do today around whether you put money in the bank or you want cash on you. And depending on why you keep cash on you, whether it's for where you're going and because they don't receive or accept cards, for example, or you just like the feel of the paper in your pocket. So some of those things I really believe won't change, to be honest. So that's why I think, there will continue to be some form of paper. But the more you actually get adoption, especially at the retail level, people might want to take advantage of that flexibility. And I think that gives them more choices. I think you will see maybe more communities forming their own tokens, if you will. I don't know if it will be tokens around use cases, but I think communities is a category I would kind of think through, of people wanting to create their own way of recognizing each other or sharing something very specific. And the technology allows that to be done much better today. And yes, with regulatory frameworks around that, that's what really makes it kind of can hold, and how we can talk to each other, and making sure that you can have a stable financial market, even if you have new tokens being created for different reasons. But stablecoin is a very interesting topic, and I'm very excited. Some of the works that we're doing around testing and showing the feasibility of CBDC as reserves for stablecoins, or stablecoin backed by CBDCs, in order to have more capital and more access, but also more a lower risk profile as well. Being able to show proof of reserves in CBDC it's very different. So if you look at the Binance proof of reserve, for example, kind of the list that they provided that they have in reserves, a lot of them are in different tokens, or whether you wish FTX had a bit more money with a central bank somewhere that you knew that you could tap into to address consumer losses. That really makes a difference. And I think when you're seeing stable coins wanting to provide a real utility, I think you're going to see a really good integration with CBDC that handles and addresses the trust factor, the settlement factor, and lowers their risk as well.
Carmel, something that you mentioned at the end is very interesting, especially to me, because I'm writing like something for a let's call it not a book, like a white paper that we're organizing with some other colleagues, and it's that the CBDC and the stablecoins are not going to compete, in the sense that the stablecoins could be backed, in fact, with retail or wholesale CBDCs. So they're not going to compete, but they're perhaps, depending on how the regulation comes up, CBDCs are going to be the back of the stablecoins and will provide more stability, more sound management, let's call it like this, sound risk management to the backing of the pegs. So that's something that I agree with you, and it's something very interesting, because they cannot compete as forms of money. They can compete with the use case, but not as forms of money, perhaps.
That's absolutely right. I posted something about that. I hope I don't lose friends at Circle, but I was actually talking about if I'm missing something, I hope someone. And I'm always humbled, right? You don't know everything about this space, and I might be totally missing something, and I'm totally okay in that space. But the Fed has the U.S. GDP as their balance sheet, if you will. That's kind of a way I like to think about it. And Circle is just one company, and they have their own balance sheet. They fundraise and they take loans and so on to provide their balance sheet that they can issue against. They take on deposits. And they are one-to-one to the funds that they take from people who want to issue their assets and stable coins. So I think you're really seeing a bit of frustration sometimes. I think, to say, forget it, you don't need to issue a CBDC, this is a better rail. But that leaves on the table the difference between the counterparty risk. There is a difference that if you hold money with the Fed versus if you hold money with Circle. Circle is big, but it's not as big as the Fed, right? So that's the concept. But we worked on both sides. So I'll validate a bit what you're saying here. We're on one side of the house for MTech. We're working through some pilots that are going to prove the technical feasibility on that and how that could work when it comes to providing a CBDC institutional wallet to an FSB, and they hold CBDC there. And then they have proof of liquidity for them to turn around and show their stable coin being one-to-one to the reserve that they have. So that's one simple model. But on the other side of the house, what we have central banks calling us after FTX, we got 6 central banks reaching out to us after FTX to say, can you help us with regulatory frameworks around virtual assets? And sure enough, we've been working on virtual asset regulatory reporting APIs because what happened happened after FTX is that everyone is, doing their own proof of reserves or having audits done and so on. And the regulator does not have visibility on that, while the data is actually very public. But that itself also introduces a CBDC licensing framework as a virtual asset provider. How do you participate in that? But also, if you are going to issue your own token, what are the regulatory parameters around you being an issuer and the requirements and the reserve requirements that you might have? And then you're given a CBDC wallet to maintain your CBDC with your license approval to issue a stablecoin. So we're actually working on both sides, and I think it's going fascinating to see how the regulator and the currency provider plays a really integrated role when you think about central banks. It's a very unique role.
Thank you, Carmelle. I haven't seen anyone from Circle in the attendance, so don't worry. I have 4 minutes to squeeze 4 questions. So okay. I'm going to ask you to, let's try to do, I am not going to squeeze the 4 of them, but let's try to give very straight answers. So we have the 10 minutes for the Q&A, because we have very nice questions from the audience as well. So the first one, there is an increasing prevalent view that there is no first mover advantage when you roll out retail CBDC. There is even a Federal Reserve paper saying this or stating this. But some countries are facing the arrival and the availability of cryptos and stablecoins. So perhaps in some countries is the availability of those cryptos and stablecoins a reason for central banks to move faster and to preserve monetary sovereignty? Let's go with Catherine first.
So I think I think I wouldn't look at it that way, in the sense, like, if any central bank wanting to create a CBDC, again, the bottom line is to ask what's the motivation and what's your policy objective trying to, because, central bank is acting as the public entity. The public good is the money itself. So what are you really trying to serve, right? It shouldn't be just to compete against cryptos or other things. Therefore, that's the only reason that drives it. And I think it comes, and this is an interesting question that we do ask central banks, is like, what is your success metric? If you're going to launch a CBDC, how do you measure that? I think a lot of the answers, like commonly, right, we found is the fact that adoption and acceptance is going to be key, because that's kind of an easy way to measure, like, if your money is well designed such that, the intended users are actually using it. So whether you're coming out first or later, the timing itself is less than as to how you design it, that whether it will be adopted or not. So I think it's more about the design and the adoption and the use cases, as opposed to I have to get out market first and fast in order just to address some very short-term issue. So yeah.
Thank you. I always highlight the design of the CBDCs is the most important part, because if there's no good use case and if you're not addressing the use case, the adoption will be very weak and poor, and that's it. Carmelle.
So the alignment for me, I think is definitely there, given that the central banks definitely see themselves potentially being threatened by the rise of cryptocurrency in some markets. However, same as Catherine said, what we've seen as either first movers or late movers at this point, those are different benefits, because I actually thank the first movers very, very, very much for taking the leap, and I mean that, right? And I used to tell Governor Rodas and Central Bank of Bahamas, there was a lot of pressure to not do this. There's so many other things that you could tell central banks to go worry about, whether it's KYC and AML, being on the blacklist, especially when you're thinking about emerging markets, go figure that out first before, you do fancy CBDC. But it really mattered. It really mattered. And I think when you look back on the journey of CBDC, we're sitting here talking about how to modernize financial markets for a new era. We're trying to figure it out, but I don't think anyone disagrees that there's a lot more to gain with efficiencies and that we know the cycles will continue to evolve. Web3 is just the latest stage that we're going into. And if the central bank, which I happen to believe, I know I get eggs thrown at me on Twitter about this, but I personally believe that there's a role for central banking markets. We might take it for granted, but there's a reason why when we're supposed to get paid and the money shows up where it's supposed to be, and if it's not, you have all kinds of recourse to go get your money, especially if it was supposed to be there, to make sure that the banks cannot, charge us non-negotiable rates and non-feasible rates. So there's a structure that we take for granted, and the monetary policy aspect of it is sometimes more complicated because you don't have perfect data and things happen. It's a very tough job when you think about it, but the alignment is actually there with the policy making and the role that central banks will continue to play in the future of financial markets.
Okay, I won't be able to squeeze 4 questions. I'm going to squeeze the last one. And this is always about futurology. Let's call it like this. I want to have your view about the future. Very briefly, what are your short and long-term predictions about the impact and market share of retail CBDCs and stablecoins? Catherine.
So I can't predict the market shares, but I can say that exciting trends are still evolving, right? Like, despite all the crypto winter or the volatility, the blockchain as the technology has real value in it, which is why central banks as well as banks are continuing just trying to figure out, right? We have real-time payments, but if we're having an alternative additional one using blockchain, what could we achieve? So there's a lot of really interesting kind of use cases that's emerging, say in a lot of the AP central banks pushing out these programmable money, trying to figure out how you can leverage smart contracts and to just to kind of automate a lot of these things better. And again, going back to Carmel's point about that efficiency, for sure, because we know that, especially when it comes to cross-border payments, lots of inefficiency as of today. And therefore, by leveraging a rail that could be, say, 24/7, atomic settlement, etc., how could we do things better so then, the merchant or the acquirer can get the money received a lot more upfront, as opposed to a 30 to 40 day kind of lag, which becomes very expensive when you're thinking about it from the business angle as well. So I would say that is continuing to evolve, and hopefully just to see more pilots and activities, and ultimately, what is going to be deployed in real life at scale is going to be interesting. And I think the role of banks, certainly coming from the regulated entities and having that proactively, seeing them, as I said, seeing banks doing tokenized deposits and etc., is also very just nice to have, because we have this version of a central bank money, but commercial paper is the thing that we're the most familiar with, and seeing that being kind of brought onto the blockchain to coexist again with CBDC stablecoins and maybe other things, who knows. I think that's just going to keep on evolving.
Thank you, Catherine. Carmelle.
So I don't do predictions anymore, especially after last year. I'm not doing prediction ever. But I have wishes. I have a long list of wishes. But for me, I think going into this year, you're going to see more of a focus on the regulatory aspect of things. It's because the early adopters have proven maybe the technical feasibility and the potential alignment to get something out there. But central banks have not yet across the world, on a consistent basis, understood and embraced the fintech revolution that's happening in their market. And I think the regulatory, and that's stopping them from tapping into a big distribution network for CBDC. So there's a roadblock, and until they really fix that, I think you're going to see a conversation where CBDC is going to be thought about in the context of fintech and the regulatory aspect. We hope we can help with that, but that's what we're seeing after the last couple of years. After ending the year with the CBDCs that we have in the market, we definitely need to address the regulatory aspect, and the sooner we do, the better for everyone else.
Thank you, Carmelle. Let's not worry about making predictions. Let's remember that Nobel Prize Niels Bohr in physics said that making predictions is always difficult, especially about the future. So
thanks.
So let's go with the Q&As from the audience. I'm going to squeeze some things and I'm going to trim some things. There's a very interesting question that I will trim for the sake of time. How will merchants' CBDC funds be held? And I think that I understand the concern of the one who is raising the question, in the sense that we're always talking about how people are going to hold to their CBDCs. But what about the merchants? Are the merchants going to be able to stockpile CBDCs, or are they going to be converted right away to deposits? How do you have any sense about this, Catherine?
Very good question. And I think that's exactly where we want to pay more attention to, just learn about what would the merchants sort of, when it comes to adoption, how would they react to it? I think, you know, if we're thinking about how do you spend your CBDC on day one, we anticipate, you know, there's going to be so much like backend infrastructure changes if you require everything to happen on day one. So very unlikely. And assuming in a situation in which, you know, merchants are still new, trying to learn about these, and if they want to accept the CBDC using existing point of sale terminals with existing sort of embedded credentials and infrastructure associated with it, the question is, how would you make that happen? And that's exactly what we wanting to do as the payment enabler, to figure out on the back end, how can I convert, say, a CBDC token back to the fiat rails such that the merchant will be able to accept. So they're not directly accepting CBDC, they're accepting the payments, of course, but it's the form in which they are able to support in today. And now over time, you know, if we're looking at a 5 to 10 year horizon, if they realize, say, the better benefits from a better technology choice or such, there could be investment being done. And you might expect, you know, over time, merchants might have a range of options to have their own wallets, hold on to different type of tokens. But, you know, then it's a whole bunch of questions that hasn't been addressed. Say, what's the best custodian solution? How, as a merchant, what's your strategy on, say, treasury management on the back end? You're going to have a bunch of, say, fiat together with CBDC, together with other stuff. How does that even look like? Now, those are quite, I guess, I don't think we have an answer today, but definitely as things just start taking speed and, say, the rollout of CBDC starting to happen, I think merchant will gradually start considering that. And we're definitely there to have that conversation with merchants to figure out collectively, as a system, as a network, globally, right? Because we have 80 million plus different merchants globally, how we can support them to have a standard set of upgrades to make that smooth for them. So yeah.
Thank you. I would love to talk with you about this, but we have no time. Carmelle.
Yeah, so I mean, I think the central banks are sharing actually how merchant adoption is something that's keeping them up at night. We're seeing that across the board, even in Bahamas, kind of early adoption in individual users. The pilot happened with local businesses, and FSBs kind of onboarded their business partners to be able to accept. And it was really seamless. You know, you could buy something from a merchant and they had their individual wallet. But absolutely more needs to be done as far as thinking through how the funds will be managed, what can be done, and how you get the integration and interoperability from different sources of payments.
Thank you, Carmelle. Last one. It is about the low adoption in Nigeria and Bahamas. There are like two questions about it. What can central banks especially do to drive effective adoption? And do you think, or do you have any thoughts about how good is that Nigeria is restricting cash withdrawals to force CBDC adoption? And we have 2 minutes, so one for each one of you. Catherine.
I probably will give more minutes to Carmelle, just because I'm not as close to the ground on these projects as Carmelle is. But I think, again, it would be helpful. I would only advise it would be definitely helpful to do some deep ground research, like literally talking with consumers, you know, businesses, asking why, if not, you're using the eNaira, why is it, right? Is it about the adoption? Is it about the older backend stuff, or what kind of cost is involved? So I don't have that color, unfortunately, but that would be the thing I would start thinking about and trying to figure out why is that low adoption rate. So
Carmelle.
So I'll take the last question when it comes to the cash limits and cash withdrawal. I think one thing that I would take the opportunity to share with everyone. Sometimes events, essentially central banking, there's so much going on. Not everything is connected, if you will, just because kind of they're happening around the same time. I personally don't know if the cash limit has anything to do with the e-Naira adoption. Central Bank of Nigeria has been on a cashless policy for quite some years now. And they've actually, this is not the first time they implemented that, even before the e-Naira, trying to get people, and other countries are doing the same, by the way. It's not just Nigeria, limiting the amount of cash that you can take out as a way to get people to be more digital and more into the system. And there are certain difficult global problems that central banks have to deal with, right? When you look at the US, everything is digital. They don't feel that there's no need technically to tell people to limit the amount of cash. They have a higher adoption of digital payments. So the central bank doesn't find itself in a position to have to do that. But if you think about the fact that you have a lot of countries that are struggling with cost of capital, just because they are on a blacklist or a gray list because of AML concerns. And one of the best way and fastest ways to address this, especially with today's technology, is to try to get more payments in a digital form into compliant rails and more visible and more traceable, so they can address, some global compliance requirements that can unlock and put a lot of pressure on the country's economy. Those things are connected, right? And I just want to highlight that because the e-Naira adoption, I think, is a separate conversation. As I mentioned before, when you're a central bank kind of thinking through, this is not, again, just Central Bank of Nigeria, this is more broadly, but let's take the e-Naira as an example. Kind of starting out with the banks does not get you closer to financial inclusion, if you will, right? The banks have different pain points and different incentives that the fintechs don't. So I think that go-to-market in that first phase of going with banks is kind of created some confusion. And of course, the banks themselves not understanding the benefits and the incentives for them. So back to the economics that I mentioned. And then as well as the stack, right? We see API-led and having a very strong distributed ledger technology and something that's seamless, that's obfuscates a lot of the node management and consensus mechanism and getting different players on the platform to figure out who's going to manage what node. At IBM, it's heavy lifting. It's heavy lifting for a technology company, let alone for a central bank, right? So using the right stack that obfuscates and takes some of those pains away, I think can be a contributor to better adoption. But I think Nigeria will figure it out. I think it'll figure it out. It's early days.
Thank you, Carmelle. Catherine, we're wrapping the CBDC broadcast. Before that, I would like to say that I hate the war against cash. I love cash. It's important for cash to be around us for a long time still. So thank you, Carmelle. Thank you, Catherine, for joining us. It has been a great CBDC broadcast. It was a lot of things to learn and a lot of food for thought. So if you in the attendance are among the attendants want to get in touch with Catherine, with the Carmelle, we're going to give some of the links to their LinkedIn profiles or to the websites of Visa and MTech. So thank you all for joining us. And please remember that coming up in January, this year, we're going to have FMI broadcast number 7 with Bank of England and SWIFT, January 25th. And the next day, January 26th, we're going to have FMI broadcast number 8 with European Central Bank and bank defaults. So thank you, Catherine. Carmelle, once again, it was very one of the nicest CBDC broadcasts that I've conducted. So thank you for joining us, and everyone have a good day.
Thank you so much.
Thank you so much. Bye.